Hi, this is Shane with the Rush Trader. It is, what is today? Tuesday the 8th. Been very busy. I released the user-defined strategies with machine learning predictions. So we're going to look at that in just a minute here. This is the NASDAQ here, up $50. Where is it? Yeah. It's one of those days where I gave back more than I would have liked, so let's take a look at that. So I went long there. What I want you to notice here is that we get the failed, this is a failed pullback signal, and the market is crushing you, right? So pay attention to that, because we're going to talk about verification methods, or changes in the entry method. Along here, right there, which gets 8 3/4 points. I think this is in the live trading, so if you want to see that, stay to the end. I'll put that on at the end. And then we get chopped up a little bit in here. Another example here we want to pay close attention to, because if you change the entry method to, you'll end up not taking a stop. This is stopped out to the tick, very painful. This is just getting caught in chop here, but that's a decent signal there. The market is working its way up, and so I don't have a problem with predicting there and getting in. Here we're sideways, so we don't do anything here. Okay. Unfortunately, we really would have liked a long break prediction here. That would have been sweet. Then we get so then there's a short here. Again, notice how you're just getting crushed. So if we can change the entry method, then we might be able to help ourselves there. Same story. You'd like to be getting longs here. This is calling for a long here, and it's covered up by the flag here. But there's a long in there as well. But it's all mixed up, right? Long, short, long, short. So the order flow just looks odd to the machine. Sideways here, and then another case here where it stopped out to the tick. So twice now we've seen that just in today. I actually saw a bunch of cases on Friday as well, at least two. And this is very much a function of just the fact that the markets are more volatile, there's more movement. So the difference now between, say, a month ago, it was so crazy that a normal response to volatility is increase your stop, and doing that then is you're just losing more money. Here you can see, if we continue to see this case, then either your responses are either increase your size, or increase the size of your stop, or back your entry off a bit. This particular case, when we look at verification bars and different entry methods, it's not going to help us here. And then here we're two sideways, and then that's it. All right. So now let's look at the user-defined study. So this was up 5 1/4 points. This is in simulation, and what this is doing is it's implementing a different strategy for when to enter, or rather, when to ask for a prediction. All right, so the chart we just looked at has a very specific set of behaviors: turning, pulling back, breaking out, that when they occur, we call for a prediction. In other words, the market is at a point where this is where we want to enter, one way or the other. Another way to think about it is the market is going to make a decision now, and so we want to get in. If you try to make a prediction on every bar, you just get killed. All right, it's too random. So what we're doing is we're identifying the spots that are key, and then calling for predictions. So now, rather than being tied to my specific behaviors that I've chosen, the system is set up so that you can define whatever trading strategy you want, and then when it signals, instead of just doing what your trading strategy says, you can say, all right, machine learning system, give me a prediction. All right, and so by doing that, you can completely automate your method as long as the signal is clean. All right, so what we're doing here is very simple. This is a squeeze brake system. And what we do is we have the Bollinger Squeeze down here, which is a combination of Keltner channels and Bollinger Bands. And when we go, when the dots down here go red, that means the price is compressing, and then when it goes back to green, it means it's breaking out. So you can see it, the bar goes orange when that happens down here. Okay. All right, so now let's look at, this is happening before I'm trading, which is 6:35. I also set this to run for the whole day, so 6:35 Pacific to 12:45. And so we get our first case here where we go into a squeeze down here, we break out of it, and then the system is predicting short, and we get first targets. We move the stop to -5 and then take a 5-tick loss. Note this case here. There's only one dot, and so I have it coded so that that's not enough. I want to see at least 2. So we get a break here and a prediction not to do anything, and then it would be nice to get a long prediction there, wouldn't it? And then we get another break, another squeeze. We immediately goes back into a squeeze, and then breaks out. And now here, this is where the verification is different. That's a 299. So if it starts with a 2, it means short. So 199 is long, 299 is short, and 399 is take no action. Okay. But in addition to that prediction, I'm also doing a different way to enter after you get the prediction. So one thing I didn't specifically mention is this is a tick chart. It's 500 trades per bar, whereas we normally you're using a range bar. So what's going on here is if the direction of the bar is not in line with the signal, then we wait for another bar. 2 bars, actually. So we're looking for, this is a short signal, so we're looking for a down bar. So we get an up bar, and then another up bar, so there's no trade here. All right. Here, 399, take no action. And then, again, no action. I like this. I like, in general, these 399s are good. All right, the market's it's going sideways here. Pretty ugly here. Here's another case where, okay, the order flow looks to the machine like this is basically a failed break short, and is calling for a long, but because of the way we're doing verification for the signal, we don't get an up bar here, so we won't enter without an up bar. Okay, another take no action. Here is a case where we break, the market's breaking lower, but the prediction is long. Okay, it's a down bar, so we need an up bar to do something. The next bar is an up bar right here. All right, it closes right there, so we place our order 1 tick below that, which is right there. That's where we get filled, and then we get 6.5 points there. Another case where, boy, you'd really like a long prediction there. And now we're getting towards the close now, and that's it. Okay, so pretty clean actually. So we'll have to see how this plays. This is just one day, so you can't draw conclusions from that. But what's interesting is, well, we've been talking about this particular method of entering after a signal, even for the range bar chart, which is the one I normally use. And I just hadn't been able to do it. I've been too busy getting this release out this weekend for user-defined strategies. But yesterday I built that verification bar, and so I'd like to run it on the range bar, like for today, and see what those results are. All right, so this actually ends up worse, basically scratch, up 3 ticks. And the reason is, let's, I don't want to stop that, it'll clear everything. it protects you in quite a few cases, but we end up missing this one, this nice one that was pretty profitable. Okay. We catch this one here a little bit. This has the same result here. I was so blind. This has the same result here in that we get stopped. We get stopped out to the tick. That's really unfortunate and super painful. It's a nice move. And then actually, what happened here? What's interesting is that we end up instead of taking one loss, we end up taking two here, just because of the way it works out in terms of your. We only took one trade there before, so there's because of the timing now. Here, we don't get crushed here, which is heartening from a psychological perspective. And then this 151 here, it's a very similar problem. It's actually a slightly worse entry in this case, but again, there's enough volatility there that you're getting stopped out by a few ticks. And then no help there. I really like this here, actually. This is kind of interesting. Right here. So this is it's this bar here. Okay. 251 means I think the break's going to fail. And because it's an up bar, we wait. And we're basically going to look for two more bars. And that bar is an up bar, but that one's a down bar. And so we place an order and get in pretty cleanly at 1250. All right. So what I think is that there's enough good about this that I'd like to run some tests across a broader time frame. Okay, so I'm going to do that, and then we'll publish those results the next update. All right, so long now and trailing as we tested the. We got long here. This is a failed pullback signal, and then the action code's gone because I brought up the screen to help a member. It looked like this, I would be looking for this to roll over actually. So that's kind of an interesting thing about the machine learning. Instead we get long right there, and then there's a little bit of a fight in here, and then we break through, and now we'll see, are we going to go back up and test this other level here? Or are we still thrashing sideways? Trailing my 20. So the action code disappears like that. So you can see there was one here right earlier, and then there was one down here I didn't take because it's not on my list, and then the 186 code that I took here, it disappears because this is a real-time system, and so when you open up the study list and adjust some setting, it recalculates everything, and since you're no longer running in real time, there's no response from the server on these bars, right? Because the server's operating only on the currently running bar. So to get those back, you have to run a replay. So I typically try not to do that during live trading because we like to see those codes and review them later on. It's also interesting to at the end of the session, snap the screen and then run a replay and see if there are any differences. And that'll help to understand if you've got issues with the delivery of your data. Are you getting your data in time? It's 7 o'clock now. The target is at 80 ticks. It's just mechanically set to be really far away, and then we just want to trail by 20 ticks. And so what we're doing here is, the trading mantra is manage your risk and limit your downside, don't limit your upside. So too many people, get a little bit of profit in the trade and they exit. Generally too soon. Even this system here, I think, exits too soon. I'd like it to exit to the zigzag as opposed to just mechanically by 20 ticks. But I haven't actually done a formula analysis to see if that's better. I need to create that. I actually had a member create a stop trail that I haven't had a chance to look at yet. But it's not necessarily better because like if the market turns around here, I'm going to point out, I'd have been much better off trailing to the zigzag as opposed to trailing mechanically by 20. But if it rolls over here, this is a good exit. So we just have to, as a human, I'll notice the times that are painful and I won't notice the times that aren't. And so that's why I can't say without an objective analysis which one's better. What I can say is that using an 80 tick target and a 20 tick stop is dramatically more profitable in replay than, say, a 40 tick target or a 20 tick target. Okay, dramatically more. So it very clearly it brings home the truth of the statement that you just want to let the market work for you. Okay. And part of what we're doing here is getting to a point where you don't have to watch this. You can just let it go. And that removes the human emotion from both the decision-making process of whether you should get in a trade and fiddling with the trade once it's on. Well, here's an example, right? I could argue that trailing to the zigzag would have been better than what I did. All right. So we would have trailed to here and then to here. And now now we don't know. The target was 80 ticks, so 07. You're almost there. But again, I'm noticing that because I won't notice the times where it's really good that I got out. The problem with this approach is that you'll often give back more than you like. So if you're watching it, it can be pretty painful. So that's why we need an objective analysis of it. And to do that, I need a way to actually trail it like this, and then run the replays and test it, compare them.